Anybody out there? Or did everybody fall asleep from this rather boring market price action today? All right, we got a few people out there. Good to see you guys. Good to see you guys like always. I think a combination of just the sideways price action and the daylight savings time, I think just has everybody a little sleepy today. I know I'm that way for sure. All right, let's jump in. I am an associate member of T3 Trading Group, which is the SEC registered broker-dealer and member if and reciprocal. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure, 11 positions, which is relatively light for me. I like it. I actually like being a little bit lighter right now. Feels good. All right, let's jump in. Let's talk about what happened or what didn't happen today. So how did we close? SPYs are... So first of all, Oracle's out after hours, so it's probably giving the SPYs and the Qs a little bit of a boost. The Oracle report looks good. It's trading up 9% after hours. It looks like the after hours high is 124 and 89 cents, which I think corresponds with about what the measured move was for Oracle. They beat on EPS, revenue's in line. They beat on operating margin. I love when a company has a nice beat on operating margin. I think that's always a really good one. And then just a lot of really positive commentary here about demand for their AI products. So, seems like pretty positive comments from Oracle here. And the stock is up a bit, and it's helping to boost these SPYs and Qs. So, the SPYs are up 30 cents or so after hours, and with that 30-cent move, you've got the SPYs pretty much exactly flat now, but they closed red by a little bit. Qs are also bouncing about 45, 50 cents or so from where we closed, but even with that bounce, the Qs are still down 0.25%. In the IWM, some relative weakness in the Russell, down 0.75%. So the big question coming into today was, to what degree, if any, was Friday's price action a warning sign for the broader market? And could that lead to us potentially breaking down through some major support levels today? And it didn't. Again, just going back to the small time frame price action from the intraday today, really very boring. There was some potential here early in the day when we gapped down, went sideways for 20 minutes. The ADMA caught up to that base of price action, so this is inherently a small time frame bear flag, with the gap being the flag pole. And then we broke lower and we pushed. And there was an opportunity for this market to be really weak and to potentially go after some more major support levels. Keep in mind, 510 is what we've been describing as our momentum support level, and then really the space between 503 and 505 is our major support level, where if we can break that 503 to 505, then we might be looking at a market change. So beginning of the day, you gap down, kind of right into the momentum support, that first level, that 510, basically bear flag in front of it, and then break down through it. So bears look like they had a little bit of an upper hand on the small time frame in the beginning of the day. Get a little bit of a bounce here at 10:10, satisfy some 5-minute extension. Now it's 10:15, 10:20, so you need to look for more of a 15-minute correction. Market moves a little bit further, getting closer to what would be the ADMA on the 15, and kind of begins to wedge out here a little bit. And I thought that the way that we broke here was going to be really important. If we could get some more time to go by and this could tighten up and this 21 EMA could catch up on the 5-minute, ADMA on the 15, you could break this wedge to the downside and actually get some real follow through. Instead, what happened is that the market broke up. It cleared through the 21 EMA on the 5. It broke up through this wedge. It started retesting and getting back above that 510 level. And honestly, once that happened, I kind of thought that getting downside continuation today was shot, and that the small time frame, the bulls were beginning to gain the upper hand a little bit. And then it was just a matter of, especially because the afternoons tend to be stronger than the mornings in recent history, do we really round up again in the afternoon, which coincides with the big picture technicals still. And that wasn't the case. You know, we basically just went sideways. It really seemed like the market was just waiting for CPI. So big CPI again tomorrow. It seems like they're always big, but another big one tomorrow, which should really help to determine whether or not this market gets saved once again by the macroeconomics and gets to continue its trend, or if that number comes in hot and the market doesn't like it, do we test that 503 to 505 area on the downside? I know we closed at like 511-ish, but on a hot number, it would not be outside the realm of possibility at all for us to be down to 505. I'm trying to remember how big that gap down was when we got the January CPI back here on February 13th. Just out of curiosity to see what maybe we could get. So it seems like on the February 12th, we closed at basically 501. And then on February 13th, we opened at 494.5. So we had about a $6.50 gap down. If you had the same gap down, which, you know, is probably relatively unlikely to get the exact same gap down on the number, but just getting an idea of what the market could potentially do as far as distance on a move. What did I just say? $6.50. So here we are at 511.40. $6.50 down would get you right to that 505 and to test major support. So we'll see if tomorrow is a game changer and gets this market below certain levels, or if it is not a game changer and we just continue the status quo of this uptrend with higher highs and higher lows. So we'll see how that plays out. One thing that I want to continue to remind traders, which I said this morning, but it's worth repeating. I've been saying it a lot over the course of the last couple of weeks. The market dynamics right now seem to dictate that smaller dips, similar to honestly what we had today, or similar to what we had on the 5th, there's been plenty of them, tend to be very viable still in this market, tend to be insulated and supported. But if you could get a catalyst, potentially like the CPI, that could lead to a bigger down move at a certain point when you begin to break these key technical levels, if you combine it with how market participants are positioned, there is an opportunity for this market to sell even harder at a certain point. So the way that I've been describing kind of my big picture thought process for the market is, while we're in the uptrend, continue to err to the side of being long rather than short. Small dips are viable, but big dips are not only not viable, they can potentially be shorted into. So it's something we should be keeping in mind as we go into this potential game changer of an economic number tomorrow. So that's the SPYs. The Qs with a bigger negative candle here on Friday that caused the Qs to lose their momentum support level, which is 440, and had us, because Friday's move down was so big, had us this morning testing the 21 EMA and potentially set up to test our bigger support zone, which is really 434 in the Qs, or just under 434. So kind of the same deal with the small time frame action that I just mentioned for the SPYs. At the beginning of the day here, you have some weakness, fine volatility on these first couple bars, but it's satisfying the small time frame extension. Then we had this pivot high into the 80 EMA. I remember Josh was calling out a short here, which was a good quick little trade. We got new lows, but we got no follow through on those new lows. And similar to what I was looking at with the SPYs, you can see it much better here with the Qs. And the Qs were what I was trading, so it's probably what I was watching a little bit more. You had this wedge build at 10:30, right into this equilibrium area, right into the 15-minute correction, and it was the same question. If this wedge breaks up, then the potential of the bears maintaining control for a bigger push towards the more important support level around 434 that we just looked at could have been in play. But instead, it broke up here, which I thought took away the potential of the down move. And now, at this point, it was, how much can we actually round up in the afternoon? Which, the answer to that question, in hindsight, was not at all. We didn't break down. We didn't bounce. I mean, this price action in the Qs here just very, very boring. The IWM was relatively weak today In some ways, though, this is my favorite right now of the 3 daily charts of our indices, even though it still has a lot of catch up to play. Big picture compared to what the SPYs and the Qs have done. SPYs and Qs, pretty much sitting around all-time highs. IWM is still, I don't know, 20% plus away from its all-time highs. So you could even make an argument that by some metrics, the IWM is actually still in some sort of a bear market. But the Russell has started to look significantly better, as we've noted with this weekly chart, since it got back above $200. And now the question is, what kind of follow-through can we get, and if there can be continued rotation. We saw good rotation into the IWM, I think, over the course of the last couple weeks overall. And the question that's rumbling in my mind that I really don't have a good thesis for an answer is, if we do lose, which again is a big if we do lose those major support levels for the SPYs and the Qs, are we losing the IWM with it? Is it an environment where we just start selling everything across the board? Or is it an environment where there's rotation? Semiconductors maybe weaken out, but IWM is able to be strong because banks are holding in and energy names are holding in and things like that. And I really don't know the answer to that. That's what I would prefer to see. But obviously the market doesn't always give me, and maybe often doesn't give me, what I prefer to see. So that's kind of the big picture here from the market. A lot of my thought process for today's trading session was based on the idea that Friday was a day to take notice of, where you kind of had this push through failure on the market, and today we're potentially losing momentum supports, where at the same time we had this big shooting star upside tail for AMD, which is something to take notice of, and this bigger negative Maribozu type of candlestick in NVIDIA that's on higher volume that also puts this in the penalty box. And the big kind of thought process in my mind was, well, is that it? Is that it for AMD and NVIDIA? And that's been primarily what's been holding the entirety of the market up in a lot of ways. If AMD and NVIDIA really need to have more major corrections on their charts, then we could be looking at a market that is very soon, potentially even today, trying to go after those more major support levels. And I do think a great way to think about markets is just in terms of if-then statements, so that you can be prepared for multiple situations. And the if-then statement that I was really, I guess, focused on in my mind was, if that is a warning signal on Friday with those AMD and NVIDIA candles and the QQQ candle itself, that could potentially lead to a more major breakdown in the market, then I might be able to actually short a whole bunch of these other names that we've been looking at. I might be able to put a short on an Amazon through 173.25, which actually worked regardless of the market working or not. I might be able to short Meta, which also had some news, versus the $500 area. We talked about that. That actually also worked out really well. It was helped by some news this morning that I think helped create relative weakness in Meta, that Donald Trump said if he becomes president again, that he probably will not be banning TikTok. So that helped this weakness here. And so both those trades actually worked out pretty decently. The Meta execution was difficult. You really had to pay down a little bit and grab stock like the second the thing opened. And these things didn't, worked out as well as they did to the downside, even without the market breaking down. But once again, it was a day of dispersion. It was a day of rotation, because the weakest names like Apple were holding in really well, even though it couldn't clear that, was it 174? Yeah, 174 acted as intraday resistance. And Google acted really well also, but we lost Amazon a little bit. We lost Meta a little bit. And it's interesting because those happen to be the short candidates on my list this morning, when most of the time what I've been saying almost every day for the last couple of weeks is, hey, if you want to short big cap tech, let's go after the weakness. What's weak? Apple, Google, Tesla. And if you want to be long big cap tech, you want to be long strength. Where is the strength? It is Meta, Amazon, and Netflix specifically. And then coming into today's trading session, interestingly enough, we were able to see a flip in that relative strength and relative weakness dynamic pre-market. Apple was gapping up, Google was gapping up, Tesla was gapping up, Meta was gapping down, Amazon was gapping down. So I didn't love the idea so much of trying to actually short the weaker daily chart names that were relatively strong pre-market as I did try to actually short strength, which is not what I normally like to do, but the strongest daily charts again were the weakest pre-market. So that kind of, had those names on my list. I didn't actually short either of them, but if you did, the opportunity was there. And the other one I was looking at was this SMCI to the short side versus 1090. That had been some support here, very clean support for basically 3 days in a row. And then can we break through that 1090? It's just a tough name to trade though, because you got to pay down so much to get stock. That 1090 was a good trade. You could get a lot of potential follow through, but you're still risking $21 to do it if you shorted through 1090 versus highs, which is a lot. And it never actually broke that opening high, so you could have been this all day, but I don't think it gave you the downside follow through that you would need to actually swing it. And the final one I had on my list, did that Pfizer end up closing well? Yeah, it was Pfizer. This actually was a pretty good trade. I was hesitant to even put it on my list because I don't like to trade names that I think are slow moving stocks, but I kind of liked the pre-market relative strength with the daily chart setup here to be able to break above the inside day and then potentially break through $28. And you could have gotten in this thing. We talked about just being long versus Friday's high. This was pretty easy actually. You just need to buy some stock off the open, give it to your level, have a small amount of risk there, and then look for your continuation. So there were a few good trades out there. Though overall, I would say it was a day not to overtrade, and it's pretty much all I got. So I'm happy to answer any questions that you guys have. The first thing I wanted to note from the VTF is Carol's comment here about I did the right thing today. I traded the first hour and a half, and then I walked away. I'm not sure if walking away is necessarily always the right thing, but I would say that knowing when to sit on your hands and not overtrade is a huge part of trading success. It's one of the big themes that I have for overall success in trading is listen to the market and let the market tell you that today is a day I should be aggressive because there's a ton of opportunity, or today is a day that I should be significantly more passive because there's not a lot of opportunity. I do think that that's one of the keys to successful trading. If you trade heavily and aggressively when there's not a lot of opportunity, it's a great way to churn yourself and bleed out money. To be honest, I was actually a little bit guilty of that with a few names today myself that I overtraded a bit. But the other side of it's really important also. If you are too nervous and too passive and you're always sitting on your hands and you don't push it when there's actually a lot of opportunity out there, then you're never actually going to be able to make money in this business either. So it's definitely a two-sided thing. Great job, Eddie. Scrolling through the VTF here. Carol's comment, the IWM can sell too, but it's probably quite viable when it finds support, and the upside in the IWM is still pretty good. I think so too, especially the closer we get to the potential rate cut. Yeah, it's a great thought process. Question from Carol, what do you think about the Bank of Japan that potentially can increase rate and the Nikkei index already also reacting to it with a big Maribozu bear candle? Can it drag down the U.S. market too? I'm trying to remember what the Japan ETF is, and it's just escaping me right now. If someone can remind me, it's that daylight savings brain. I am not an expert on Japan. Would be the first thing that I would say to you. Thank you. EWJ. Wow, yeah, pretty healthy gap, or traded lower after this thing's obviously been on fire. So, like as I was saying, I am not an expert on Japan or the Japanese market, to be honest. I have a general understanding of what's been going on there with their inflation or lack thereof for such a long period of time, and what's finally been going on, and the economy over there seems like it's finally woken up with a tremendous amount of support from the Bank of Japan, and oh man, the guy's name is escaping me. All the policies that the one guy implemented, but it's not my area of expertise. I don't think so. I think that in some ways, yeah, Abenomics. Um, I think that the biggest effect in some ways that Japan would have on the U.S. is just in relation to the strength of the dollar and how that affects U.S. markets. So that's something that we always want to continue to pay attention to. It's one of our big factors. We're always paying attention to the dollar. We're always paying attention to interest rates. But the whatever it's been, 40 years or whatever that it took the Japanese market to make a new all-time high didn't seem to really negatively impact the U.S. market very much. So I don't necessarily think that a potential blow off top or anything like that in Japan will have an overly dramatic effect on the U.S. equity market either. But that is not an overly educated answer. And like I said in the beginning of my answer to your question, I am by no means an expert on Japanese economics or the Japanese market. So take whatever I say with a grain of salt, but I appreciate the question. From Cameron, what are your thoughts on how many trades to take per day? And so that's what I was just talking about a little bit, and how that might change as one becomes more experienced. Sure. So I'm trying to actually think about the answer to your second question first. I don't think it necessarily needs to change too much as you become more experienced. Maybe a little bit. So as a general rule, like I was saying, I think that one of the big keys to success in this business is knowing when to trade aggressively because there's a lot of opportunity, and knowing when to sit on your hands and to not trade as aggressively because there's not as much opportunity that's out there. And that knowing those things is something that definitely comes with being an experienced trader. I do my best to let everyone know every morning what my game plan is, what my expectations are. If I think the market's a coin flip, if I think there's a lot of advantage, if I think that it's a day to be aggressive, I always do my best to provide that information every morning as I see it. I don't think that necessarily changes a trader's approach though, unless they're brand new. Like if you're brand new to trading, then I think that kind of the less decisions that you can make, the better. And I think that if you're brand new to trading, you should trade like almost every trade the same, like not try to implement risk skew in your trading where you're risking more in some and less in others. I think that you should trade like every trade with the same amount of dollar risk and just take all of your trade setups that you see as they trigger, kind of regardless of anything else except if you're past your maximum loss. If you're past your maximum loss, risk management is the most important part about the business, and you should always stop trading. So I think that like one of the best ways for new traders to kind of gain experience, because they probably don't have the experience level to recognize all of the things that we talk about all the time, and some of the stuff I was just saying about knowing when there's a lot of opportunity, when there's not. I think that it's a good thing for brand new traders to trade small with their risk, to obey their risk management rules, obey their maximum loss and their limit down, but within the confines of their risk management rules, to trade every setup that they see more or less, as long as they are above, again, their max loss, and to trade them fairly uniformly. And then that will give you the experience to eventually begin to implement things like risk skew into your trading, where you want to risk more money in significantly better trades and better setups, and less money in worse trades and worse setups. Outside of the brand new trader like I'm talking about, then I think that the experience level doesn't have too much of a difference on how much you trade. I think it has more to do with what your edge is in the market, and the opportunity that's there. Is it a day with a ton of opportunity, or is it a day where the market's flatlined like it was today? So I hope that helps, Cameron. I appreciate the question. From Carol, in strong bear trend, if it sells, you can go short and it continues. Same with the bull trend. I think that's what you call momentum. No, trend and momentum are a little different. That's when the gap is not filled and we get continuation. How can we identify those kinds of momentum setups? So, trend and momentum are different things. The definition of a trend is a pattern of higher highs and higher lows. The definition of momentum is the greater the price, the greater the demand. It leads to parabolic moves, and momentum can apply. I just gave you the definition of the upside, but it could apply to the downside as well. So in a trending market that doesn't really have momentum, you'll see a lot more of like you gapped up in the morning, the gap fills by 9:45, 10 a.m., or a percentage of the gap fills by 9:45, 10 a.m. Then you get your pivot low, then you get new highs on the day, and then you get trend continuation. A momentum market is more like you gap up and you keep going higher. You gap down and you just keep going lower. And a momentum market is a market where you can be looking at a market that is extended, that just becomes more and more and more and more and more extended. And then you could take advantage of that by, pressing things harder than you would otherwise, and maybe caring a little bit less, though you definitely should always care about it, about terms like extension. Because extension doesn't matter as much when you're in a momentum market, because you can, the idea behind momentum is to buy high to sell higher, or to short low to, cover even lower. So that's the first thing I would mention. How do you identify the type of market you're in, or how do you identify those setups? Well, we take it a little bit as it comes, but I'm trying to think about how to answer that question. You'll know that you're in a momentum market when so there's certain things that confirm momentum. It would be the first thing that I would say. So if you are nervous about chasing stock, like buying high to sell higher, like I was talking about, or shorting low to sell lower, you certainly want to make sure that you have the volume confirmation, because usually that's what you need. You need volume confirmation first and foremost. If you have like a sleepy market that doesn't have a lot of volume, it's very unlikely that that's going to be coupled with momentum. I think understanding the broader market environment that you're in is also part of it. So I've been spending more time recently talking about the last few weeks, really, about how in an up market like we've been in, sometimes that ends with like a blow off top, which is like a momentum move, and that you shouldn't be as afraid right now in this environment to potentially chase price in a NVIDIA or an SMCI, especially if you are seeing like the option flow to confirm it, because option flow is also one of our layers of probability. And the information that I'm trying to provide you guys now about how at a certain point on the downside, selling could lead to more selling. Well, when that happens, that's when you'll also see momentum to the downside, and you could chase price a little bit down to potentially make money, and you could do that in a way that in another environment that you wouldn't want to do that. And where does that information come from? Well, it really comes from like Pat's note and understanding the information that we're getting about broader market positioning and CTAs, and where a CTA sell trigger might be, and how their selling could lead to liquidation of trend following algorithms, which could lead to liquidation from vol control algorithms because the VIX is spiking, and then that selling leading to more selling could actually create significant momentum to the downside. And then the types of setups that you're looking for in those situations are technical breakout and breakdown setups. Those are momentum trades. A breakdown trade or a breakout trade, that's a momentum trade setup. You're buying high. You're buying the break of momentum, like this MindMed today, which I bought a feeler on, and I battled the stock a little bit, which I probably shouldn't have done. But really the trade in this thing was, let's buy this through $10.10. you're totally chasing price higher here, but if it breaks that, it's a low float name, it could get to $14 today. And what you probably don't want to be doing is buying this thing in any way on the way down because it's super extended here and the momentum is not actually confirming it. So you can buy a breakout for momentum, you can short a breakdown for momentum, or you can utilize these inside bar momentum setups, right? Because we want to utilize inside bars as an execution strategy for when we like other things. What are those other things? Trend and momentum. So I hope that helps, Carol, and I appreciate the question. From Roble, can a gap be filled with another gap? Looking at the AMD daily gap from the 3.5 high. Yeah, and then the gap down this morning. It wasn't fully filled in the three following trading sessions, but it gapped down and held below, creating another gap at this time to the downside. Would that constitute a gap fill of the 3.5 high? I don't know. I honestly don't think that it's important to be totally honest with you. There's this saying, and I'll explain what I mean by that. There's this saying in markets that all gaps get filled, and we know that that's not true. And what we really want to analyze with every gap that we're looking at is what does this gap do to the market participants who are currently in the stock. So when you have a gap that's filled by another gap, if you even want to call it that, or you have a gap on one side of price action, you have a gap on the other side of the price action, I don't think that necessarily the right question is, does this count as a gap fill? The right question is, what does this do to the market participants who are in the market? And what you have when you have a gap on one side and then price action and a gap on the other side, kind of like with this AMD, is an island top. And it's interesting because I didn't even think about this as an island top really until you brought it out. But I could easily see someone making the argument that these 3 days of price action here are an island top. So what did this gap down do to every single person who bought stock and still had that stock from these 3 trading sessions? It puts them out of the money. And island tops are called island tops for a reason, because those trapped sellers are then forced to liquidate on a trading session like today, which causes you to maybe break this support level from this pivot, which triggers more sell stops, which brings you down even further into this equilibrium zone. Maybe it then gets you into this gap. So then there's more sellers coming in into this gap. So then maybe that gets filled down to 193. And the reason island top is an island top is because sometimes that is the catalyst that actually creates a reversal and flips the feedback mechanism of buying leading to more buying, which comes from an uptrend, to selling leading to more selling, which can become a downtrend at a certain point. Because right, that's what we're doing with technical analysis all the time. Is the art of technical analysis is really the study of supply and demand in the market to figure out how market participants are positioned so that you can better understand what they are most likely to do next. And this type of setup, these types of reversal patterns or topping setups or whatever, really what they are is they're mechanisms that switch the feedback cycle from a pattern of buying leading to more buying to a pattern of selling leading to more selling. And this then coincides with why I'm thinking AMD breaking down, the NVIDIA candle is no good, the QQQ candle from Friday is a warning signal. Like, is this it? Is this what now actually causes the market to break those major support levels? Because again, what happens if you break those major support levels, it's more of what I'm talking about. You can go from a flip in your feedback cycle to more buying leading to more buying to selling leading to more selling. And that's why I keep saying, like, we're in an environment right now, and then you couple that with the positioning information where these small dips are very viable because that's the environment, that's the feedback cycle. But a big dip that triggers more selling from more places can force the market to a spot that then creates and forces even more selling, right? So that's how we want to be thinking about markets most of the time, is that they're working in feedback cycles, unless you're in a range-bound market. A range-bound market is just buyers and sellers are relatively in equilibrium, and therefore your market's moving sideways, and then you have to have strategies that can take advantage of that as well. So I appreciate the question, Robo, and I hope that helps. From David L. Rivian has been trading well. It has been trading well within this range from 1250 to 1365. Since his announcement day last week, possible upcoming setup for a range breakout opportunity. I don't necessarily consider 2 days within the range to be a real range. What you do have with Rivian today, though, is an inside day. It's an inside day into this earnings gap that it had back here. So I think that inside day is actually a potential setup in either direction. If you get the inside and up, then you're working further towards that gap fill. If you get the inside and down, then this was just a pivot high and what's overall a weak stock. So I think that this is one that you could actually trade in either direction as it breaks, and we can pay attention to that tomorrow. From Rich N, asking questions that he knows the answer to so that he can help everyone. I appreciate it, Rich. Do good momentum trades ever give you a second chance to get in? And that's something that's really worth mentioning as well. So appreciate the question, Rich, even though I know you know the answer. I think that some traders struggle, especially newer traders, with like taking a trade when they want confirmation, right? Like, someone asked me about Pfizer today. I don't remember who it was. Like, Pfizer ripped off the open these first 15 minutes, and the question was, do you think it's a good buy when it touches the 80 MA? And I was like, I don't know, maybe. Like, let's see what the setup looks like when it actually touches that. That's never going to be as good of a trade as just being long the thing to begin with. And I think that was my response, was like, let's see what the setup looks like when it actually tests it, but I'd rather you already be long. And these trades, I think, are really tricky mentally for, thanks, Eddie, for newer traders because, obviously these trades fail, and traders get in their brain the time that it failed and they lost their risk, and then they are missing out on the times that they bought the trade for a very tight risk, and then it did exactly what Pfizer did today. Because you literally could have bought Pfizer, I don't know, very easily for under 10 cents worth of risk, and then caught this full move out of it, and then be swinging it tonight. These momentum style trades are always my favorite trades. And with this trade, it's one thing to look for, like your question, look for the pivot low to come in the equilibrium area. Like, that's a good trade. I don't think it's as good as the opening momentum trade, but it's a good trade. The bigger problem that traders actually run into is they'll see this whole move go off, and then they'll see, like, and this is not a great example because the trade worked, but they'll see, like, fine, it pulls back into this 15-minute correction, it gives it bounce, then it makes new lows, and then it's trading somewhere, down here, and they're like, okay, now I'm going to buy it because of the great move earlier in the day, and they feel like they've got confirmation. It trades that give you, like, momentum trades that give you a second chance of getting stock at good prices. The only reason why I gave you that second chance is because the trade's most likely failing, and you don't want to do that, whether that's happening an hour and a half later, like this may have, or whether it's happening 5 minutes later. I mean, Meta was another example. Meta, in some ways, was a breakaway gap to the downside below $500. I love these trades. These trades are really my bread and butter. You need to get this stock immediately off the open. And this was tricky. You had to pay down a couple dollars. I wish we could have gotten a little bit of better pricing. I wish it could have opened up at 500 or a little above 500 so that we could have taken the momentum short through the level. But again, you don't always get what you want. It gapped down $2 past the level, and then it's rapidly falling the second the market opens. So you probably had to take on like $2.50 worth of risk in this thing to actually get stock. But that's always going to be the better trade. You want to get that stock immediately, and then when you look back 5 minutes later, and the thing is now at $483 and it's $17 below the level. If you've got stock, you have great stock because this happens so fast. No one was able to get it. You have the best stock that's out there. That's my favorite. Like, my favorite stock is honestly, if I'm in a momentum trade and then I ask the VTF, hey, who has this with me? And I get like 1 to 0 responses. I honestly, I hate to say it this way. I don't mean it to be a downer for everyone else, but I feel like I know I have really good stock if that happens because no one else was able to get it. And then if all of a sudden, it snaps back to 497 and 10 other people said that they're in, then my trade's probably shot. So you always want to make sure that you, for momentum trades specifically, get it that first time, that first opportunity you get that stock, or honestly don't take it at all, or wait for a new setup to come in, like Eddie was talking about with Pfizer, but recognize that inherently that new setup, while it's fine to take that, will never actually be as good as the initial momentum trade. My problem was this trade was getting in off the open. I felt I missed it and had too much risk versus the low, but your explanation helped. Yeah, well, that's exactly what I'm talking about. Like with Meta, I missed it. Pfizer, I missed it. You need to be hyper focused on getting that stock the second the market opens. And if you missed it, you missed it. And if you got it, then you either have really good stock if it's working, or your trade's just instantly failing usually. So, appreciate the questions, everybody. Popping over to the YouTube. What RH is the question? Is this Restoration Hardware? Yeah. Stock trade's a little bit thin would be the first thing that I would say. So I probably don't love trading this. The setup is starting to look a lot better. It's taken the time to kind of build out this consolidation here. You could argue that this is inverse head and shoulders if this is a downtrend coming into it. I don't love that though. And it's breaking above resistance here. So Restoration Hardware is looking pretty good above 280 with today's close above 280. I like it a lot better now than I did previously. So appreciate the question from Sebastian. What do you think of shorting Tesla today at the open? Below 175. Yeah. Or yesterday's low. I checked the daily. I thought we could see downside. Thanks for the question, Sebastian. We actually spoke about this scenario specifically in the morning meeting today. I said in the morning meeting that I actually didn't. I've been very bearish on Tesla, but I said that I actually didn't like the idea of shorting Tesla today because of the pre-market relative strength that it was showing. The weakest ones, Apple, Google, and Tesla, were all gapping up this morning when the market was gapping down. That maybe not like it, but then I did also say that while I don't like it, if you're seeing it fail, there could be a momentum short through 175 or below yesterday's low. So I didn't love the idea of the trade today because of the relative strength, and I think that relative strength was very quickly confirmed off the open. But if in the first 1 minute of the day when it traded down on this tail before it snapped back up, you were trying to short this green to red pre-market through 175, I don't hate it. I don't hate it. That was the one kind of example where I said, hey, you probably could short this for momentum if it's breaking through the level, but otherwise I didn't like the pre-market relative strength. Gap could be an example of momentum if it goes tomorrow. Yeah, so you'd be buying a day two through $22 tomorrow in Gap, and I normally don't like buying day twos, but because when you're buying a day two, it means that you're inherently chasing extension. But when do you want to potentially chase extension is when there is an opportunity for momentum to come in. When can there be an opportunity for momentum to come in? When you're still kind of post-news, you just had earnings recently, and you're breaking through a major level. So yeah, there is a chance of momentum coming into Gap through 22 tomorrow. I would note, though, that this tends to not be a momentum stock. Every once in a while, these retail names surprise you and give more momentum than one might expect. All right, so I think we covered it. I hope everybody had an okay day today. I hope no one fell asleep at their desk with the boring sideways action that we had for most of the day. I hope no one overtraded a little bit like I certainly did. I hope everybody had a great day and that you're learning. So have a fantastic night. I'll see you all tomorrow. And if you're on YouTube, give me the thumbs up.